So we do these presentations a lot, and I thought to myself, what do people actually want to see besides me talking about investments? I thought, I've got a house full of puppies, and people love puppies. So this is Bessie and Benjamin. We work a lot as a firm with Jenny's Rescue Ranch, and personally, my wife, we do a lot of fostering and rescuing of dogs. So if you are in the market for a new puppy, these two are going to be available for adoption here pretty soon. But they have lots and lots of other dogs that they take care of, foster, rescue. So if you're interested in doing any of that stuff, feel free to reach out to me directly, or you can get in touch with Jenny's Rescue Ranch, and they will have some puppies or older dogs that you can get introduced to. So without further ado, I will get back to the regularly scheduled programming. Anyway. So now, back to the investment stuff. What are we looking at here? We talk to a lot of people about investing, specifically equities, and they'll tell us that stock market is too volatile. And what someone's saying when they're talking about volatility is that stocks go down. Nobody cares that stocks are also volatile to the upside as well. Again, nobody complains when the stock market goes up significantly like it did last year. They only complain when it goes down like it did in 2022. So the solution for that is holding stocks for a while. So when you hold a stock for 1 month, there is nearly a 40% chance that you are going to lose money. This is a really important point because a lot of people check their account statements all the time. They get into a stock, it feels really good, and all of a sudden they just see it start going down, and they think this is a scam, I need to get out and move into something else that seems safer. If you checked your account statement once a year, it would feel like you were losing money once every 4 years. Not great, but certainly better than losing money 40% of the time. Now, if you go out to 5 years, even if you go back to 1929, you have roughly a 90% chance of making money. When we talk about holding stocks, if you have no intention of holding a stock for 5 years, you shouldn't hold the stock at all. 5 years in our mind is really the longest, or the shortest rather, time period that you should be looking to own a stock. Once you get out to 10 years, there's a 95% chance that you will be profitable on your trade. And again, this goes back to 1929. 1929 and 1940 was the worst segment of the stock market's history. We had the Great Depression. We had negative years followed by negative years. If we go out to we actually go out to World War II and beyond. Professor Jeremy Siegel did the research, and he found that the longest it has taken you to recover with reinvesting dividends in your stock portfolio in the S&P 500 was 5 years, 8 months. So we get asked that question a lot. How long do stocks go down for? Sometimes they recover really quickly. Sometimes it takes longer. Since 1950, we've had 16 bear markets. Now, a bear market is officially defined as the market or the stock market going down 20% from some peak to some trough. But what we find is that a lot of times we'll go down 19% and change. So 76, we were down 19.4, and you will see that 19% pops up over and over again. So when you see that the market was going down 20%, or they talk about bear markets, they often carve out these where we didn't quite get there. But for this chart, we're looking at items that were close enough to feel really, really painful. And the other thing is, right here, we're looking at peak to trough, potentially inter-year declines. So in 2020, COVID, the stock market went down 33.9% over the course of 33 days, but it doesn't even show up on this, it doesn't even register on this chart because it was such a short-term blip that the market actually finished positive on the year. So I say that just to point out that the stock market is a very, very potentially volatile place. Volatile meaning downside, but also upside. If you were to get into the stock market at what seems like the worst possible time, I know in previous notes I talked about 20. If you were to invest in the market right here before the stock market went down 49%, and then you held on, and then 2007 you went down another 56%. So you just got cut in half twice. And that was followed by down 19, down 19, down 33, down 25. And yet, despite that, over that time period, your portfolio was still up over 400%, and average returns in excess of 7% if you're reinvesting dividends, simply because the stock market doesn't just have downside volatility, it also has upside volatility. So again, the point I'm just trying to make here is the simplest way to take some of the risk out of your stock portfolio is just to hold it for a significant number of years. And for our investors, we strongly encourage you that if you're not going to hold a stock for at least 5 years, you probably shouldn't hold a stock at all. That being said, I'll sign off and get my puppies back here. But Bessie and Benjamin, again, Jenny's Rescue Ranch. If you are in the market for adopting or fostering a puppy or grown adult, you name it, they do a great job in the foster community or in the rescue community. So you can look them up. And anyway, if you have questions about this or anything else, let us know.